Bonjour, the French connection to deflation. History doesn't repeat, but it rhymes, said Mark Twain. And the amount of money printing that's going on at the moment has an echo from 300 years ago. Let's take a look at a clear Elliott wave pattern and its dramatic implications.
300 years ago this month, Paris and London were in psychological devastation. Both cities were dealing with the fallout from the bursting of two of the most famous financial bubbles in history. London's South Sea bubble had deflated in the summer of 1720, but prior to that, John Law's Mississippi scheme had come crashing down in Paris. Rue Quincampoix is a narrow street in the heart of historic Paris where in 2020 you can enjoy a cup of bubble tea in an establishment called Bubblitas. I'm pretty sure that the irony would be lost on the franchise owners, but in the Parisian springtime of 1720, Rue Quincampoix was an epicentre of frenzy as the bubble of the French monetary system imploded. It was here that stocks and shares and anything else were traded, and where, as John Law's money printing inflation had created the illusion of wealth, a new French word was created, millionaire. But many of those Rue Quincampoix millionaires became paupers in Parisian poorhouses as the gambling Scotsman's luck ran out and the inevitable deflation took hold. Despite an echo of money printing gone mad, circumstances are a little different now. Nevertheless, the French stock market might still hold an important clue which points to another devastating bout of deflation ahead. This chart shows the Cotation Assisté en Continu 40 Index, or CAC 40 as it is better known. Having topped out 20 years ago in 2000, the CAC 40 has traced out an ever-narrowing price range since. In Elliott wave terms, this is what is known as a triangle pattern, and we know that triangles consist of 5 internal waves, A, B, C, D, E. The fourth wave of this triangle, wave D, peaked in February of this year, and thus the fifth wave decline is currently in operation. Now, here's where Elliott wave analysis can provide a remarkable edge. Wave E of the triangle should itself subdivide into a three-wave affair, A, B, C. But the decline from this year's high into the March low very probably consisted of 5 internal waves, and so, if that is correct, under the rules of Elliott wave formation, it has to be labelled as only the first wave, A, of the decline. What that means is the bounce from March is very probably wave B, meaning that it is counter-trend, and that a large decline in wave C is dead ahead. That decline has the potential to wipe 50% of the value of French stocks before the triangle finally ends. Thus, the French market may hold a very valuable clue that the current advances in global stock markets are set to reverse next year.
Ooh la la! If this analysis is correct, 2021 could turn out to be a year for the history books in the European stock market. You can stay ahead of the herd with the European Financial Forecast Service.